For more stock news updates, remember to press the like button and subscribe. With that being said, let's get straight into the video. Palantir Technologies has quickly positioned itself as one of the most prominent artificial intelligence stocks in 2024. Its stock price has surged by approximately 280%, significantly outpacing the expectations of analysts and investors alike. This remarkable growth has placed Palantir at the center of discussions about artificial intelligence investments, but there are several factors to consider beyond the headline-grabbing percentage increase. While the stock's rally is impressive, it has not been driven purely by a substantial expansion of the company's business operations. Instead, a significant portion of the gain comes from a sharp rise in the valuation investors are willing to assign to its performance. This phenomenon has resulted in a valuation metric that the company hasn't seen since 2021, a period that preceded a dramatic decline in its stock price. This context is vital for current and potential investors to understand. At the heart of Palantir's success is its artificial intelligence software, which has garnered significant interest due to its unmatched capabilities. This expertise has set Palantir apart from its competitors, many of whom lack the depth of experience Palantir has accumulated over years of development. Recognizing the potential for broader applications, Palantir expanded its platform to serve commercial enterprises. By doing so, it unlocked new revenue streams and began bridging the gap between its government and commercial businesses. As of the third quarter, revenue from government contracts still outpaced commercial revenue. However, the commercial segment has grown rapidly, reflecting a more balanced distribution of income streams for the company. The recent surge in demand for artificial intelligence solutions has created a windfall for Palantir. Businesses across industries are increasingly looking for ways to integrate artificial intelligence into their daily operations, and Palantir has emerged as a key partner in this transition. The company's offerings provide two primary benefits for its clients. First, they automate routine tasks that employees would typically handle manually, leading to increased efficiency. Second, they enable employees to make better informed decisions by delivering real-time insights derived from vast datasets. These advantages have contributed to Palantir's strong financial performance. In the most recent quarter, the company reported product revenue of $726 million, a year-over-year increase of 30%. This growth was particularly pronounced in the United States, where domestic demand has outstripped international interest. Revenue from U.S. commercial clients rose by over 54% year-over-year to $179 million. While revenue from U.S. government contracts increased by 40% year-over-year to $320 million. Although international sales account for approximately one-third of Palantir's total revenue, they have not yet experienced the same level of enthusiasm for artificial intelligence seen in the US market. While this segment is not underperforming, the slower adoption of artificial intelligence outside the United States has resulted in more moderate growth. However, if international clients begin to adopt artificial intelligence solutions at the same pace as their US counterparts, Palantir's growth trajectory could accelerate significantly. Despite these positive developments, there are concerns about the sustainability of Palantir's current valuation. With a stock price that has risen approximately 280% this year, yet revenue growth hovering around 30%, there is a noticeable disconnect between the performance of the business and the performance of the stock. This disparity has led to a sharp increase in the price investors are willing to pay for Palantir shares, pushing the company's valuation to nearly 60 times its annual sales. The last time Palantir traded at this valuation level was in 2021, and the outcome was far from favorable for investors. Following its peak valuation in February 2021, the stock price plummeted by around 80% from its all-time highs over the next 2 years. It's important to note that this decline occurred even though the company's revenue continued to grow during that period, illustrating the risks associated with excessive valuations. Valuations of 50 times sales or more are exceedingly rare and are typically reserved for companies experiencing extraordinary growth rates, such as doubling or tripling their revenue year over year. Palantir's growth, while strong, does not meet this standard. Its revenue is increasing at a rate of 30% annually, which is impressive, but falls short of the performance achieved by other high-growth companies like Nvidia. Nvidia, for example, has experienced revenue growth of 300% year over year for multiple consecutive quarters. Despite this rapid expansion, Nvidia's valuation has never exceeded 45 times sales, underscoring the discrepancy in expectations for Palantir. This mismatch raises questions about whether Palantir's current stock price is sustainable. History may not always always repeat itself, but it often follows similar patterns. Palantir's current valuation is reminiscent of its peak in 2021, and unless the company can significantly accelerate its revenue growth, it may face similar challenges in the future. While it's impossible to predict exactly when this correction might occur, the risks are clear. If Palantir continues to grow at its current pace without a substantial increase in revenue, investors could face losses similar to those experienced during 2021 and 2022. Given these risks, what steps should investors consider? While there's no need to sell all your shares immediately, taking some profits off the table could be a prudent move. This approach allows you to capture gains from the recent rally while maintaining some exposure to future growth potential. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.